Yesterday, I took a series of profits in really high probability trades, and Clubhouse members profited from those hand over fist. Absolutely loving it. I got a ton of emails, thank yous, all sorts of stuff. And so today I want to walk through those trades with you guys to show you when it's time to take profits, particularly ahead of a big, let's say, earnings announcement or a Fed meeting or something like that. So let's have a look at how we did that. Traders and investors fail to make money in the markets not because they don't have a plan, but because they actually fail to stick to that plan. And very specifically, the biggest mistake I see people make is essentially overstay their welcome in trades that have gone in their desired direction, so they're making money. So what they tend to do is they end up holding those trades in hopes of much further gains, and they end up holding those into crucial events. If it's a single name stock, they end up holding those stocks through earnings announcements, through all sorts of stuff. Or if it's an index or something like that, they're holding it through something like an interest rate announcement by the Fed or some other central bank. And when you have profits on a position, it is very silly to keep those kind of positions open into a big unknown like that, where essentially you have a binary outcome, at least for the near term. So what I did here yesterday is we took a series of profits in trades that were already doing very, very well, and we took those off ahead of the FOMC meeting so as to essentially A, take profits, B, clear the sheets a little bit, and really kind of get a little bit more back into a neutral focus so we can pounce on new opportunities when they come once the Fed is done. So let's have a look at the chart. So here are the three trades that we took profits in yesterday ahead of the Fed here, and I want to quickly walk you through, guys, what this looked like. So first of all, Home Depot, we took a 70% return on our money, so nice and juicy profits. Bank of America, 68% return on our money, and Clubhouse members absolutely killing it with these trades. Gold, also the GLD, we took a 38% return on our money, again, ahead of the Fed, taking money or risk off the table, so to speak. So let's first start with Home Depot. Our bet here very specifically was that the stock was basically topping out here. I can't go through the entire analysis right now given the allotted time in this daily vlog, but essentially you can see the stock had breached below the 200-day moving average. It was essentially getting quite exhausted, and again, we were very, very correct in this stock. Why take the chance of overstaying our welcome when the stock had a very, very nice sell-off over the past 2 weeks or so, and we were completely right on it? It just makes no sense from a reward to risk perspective to overstay our welcome into the Fed. Even if, let's say, the stock were to completely fall apart after the Fed, it could rally very strongly. And you can see actually as I'm recording this right now, this stock is actually bouncing almost 2% or 1.75%. So Home Depot, a great example of a trade. We took nice profits in heading into the Fed and not overstaying our welcome, booking those profits that we have. Bank of America, same deal. We essentially made the bet that the banks and Bank of America specifically were going to basically top out here. There was a whole bunch of technical resistance here on that. And essentially, that's exactly what happened. So the stock dropped very nicely here over the past couple of weeks. So we were absolutely correct in that trade. Made, as you saw before, 68% return on our money. Why overstay our welcome into an interest rate announcement by the Fed where anything could happen? Yes, we could make much more money by the stock falling apart, but we could also basically give back all of our gains, if not more, if the stock rallies very strongly. So again, point is to take profits when you can. And lastly, the gold GLD, very nice return there, about a 38% return on our money. We essentially made the bet that the GLD here just a number of days ago would rally back to the upper end of this trading range. It did exactly that. Ended up getting to that zone between 122 and 124 that we had forecast. Price target reached. Again, why overstay our welcome into the Fed? So again, the number one lesson here today, guys, is to make sure when you have these trades on and you're heading into a big announcement, whether it's a Fed, whether it's some other economic data point, whether it's a big earnings report, whether it's whatever it could be, or a Brexit vote that we now have coming up, it just makes very little sense to, from a reward to risk perspective, to keep those kind of trades on. Oh, and you know the deal. Go to Instagram.com/StudyTrader. follow me on Instagram. Also, please give us a thumbs up on the YouTube video, subscribe to the channel, and I'll see you guys in the next video.